S&P 500 trade idea from the 11th of October 2020. This trade idea was presented by our mentors in our Futures Weekly Income live trading class on the 11th of October 2020. Here we picked a November low in stocks just prior to the Biden versus Trump election date. Now we know that November was one of the strongest months for stocks that have been recorded for quite a while. Stay tuned until the end to see how we timed this with our students. During this live trading session, we identified a clear supply and demand imbalance. Our mentors went through a full analysis of the product and set all trading parameters needed to enter the trade. Our students are taught to buy, go long once price comes back into the demand zone. Here you can see a screenshot of the demand zone identified in the session. This includes a stop, entry, and target. Once our mentors set the trade together with our students, their work is done. Our students can now forget the trade and let it play out without spending more time in front of the screen. This predefined set and forget and get a live trading approach helps our students to master the supply and demand trading skill set without sacrificing their lifestyle. Now let us take a look at the result to date. You will see that during the live trading session, we discussed a clear first target or profit taking area of 3,800 points. Today, this trade could still be running for you, as we also discussed a very bullish longer term cycle was just about to start. But you can see that for yourself later on. You can see we entered the trade in the lower demand zone at around 3,280 points, with a stop loss below the entire zone at around 3,150 points. This trade went into our planned target area and therefore achieved a maximum risk to reward ratio of 1:6. This means that for every dollar you risk, you make $6 of pure profit. Let us put this into perspective for proactive investors. If you were to risk $100, you would walk away with $600 of profit. For our advanced traders who are proven consistently profitable, risking $1,000, you would make $6,000 of pure profit. This was a weekly income trade setup. These trades are designed to hold for weeks only and hence are designed to create an additional monthly income stream. But these trades on stocks and equity indices, just like the S&P 500, can also be designed to create longer-term wealth when holding for longer. Here you can see the analysis we did as a recording. All our sessions are recorded and saved in our campus library. They can be revisited at any time for 100% transparency. Also, we only share trades that either us or our students took in the real trading arena. One of our students who took this trade is Mark. Feel free to reach out to him and ask him about this awesome trade setup. His Instagram handle you can see right here. See the analysis of S&P 500 we've done live with our students for yourself now. Because also what's happening now is we're in that election year still, right? And we have the seasonality within that election year, which is actually more positive than negative. And towards the beginning of October, mid of October, and then end of October, we're getting this massive push to the upside. So now we have the election year seasonality, we have the yearly end of October seasonality that all work in our favor, that are all pointing towards the upside. And after this election year seasonality, we also have the post-election year seasonality. Now, while this is more like a mixed bag in terms of probability and in terms of average increase, that's why the average increase is actually not that great. But the average increase is also not that great because also within that year, first you see a very big, steep increase, appreciation of asset prices, after which you have usually a big drop in asset prices. So usually what this looks like is looks like this here. So this is your post-election year seasonality. And in the beginning of the year, beginning of the year, then in February towards the end of February you get a little bit of a seasonal low. after which you get this huge pyramid, right? First markets just rally, and then they drop a little bit from August, September onwards. And if you're also looking at the charts, if you're remembering this, when Trump got elected back then, they come up with these funny games here. It was 2017, and then 2017 was the post-election year. And then you look at February right here, end of February right here, you just have this huge, absolutely huge post-election year rally. And after this huge rally, you get a drop, right? So this is how that then moves. So we are setting up a longer term speaking for a huge, huge, huge rally, right? This is the October seasonality, just even without the election year. And now we have the October seasonality with the election year. And then maybe we get a little bit of another drop until February. And then from February onwards, we have that post-election seasonality, which again should drive markets higher. Just looking at the cycles here, we're looking at a potential bullish few months. And so we want to set ourselves up for a long position to potentially be riding that wave to the upside, right? That wave to the upside. So we have now created, actually, if we stick to the weekly charts, we have now created even new weekly demand right here. So I'm just going to put that in. There's new weekly demand in here. And right within that area, so the 3314 area, we now also have a daily rally-based rally and this drop-based rally here as well. So I'm just going to remove that. And being mindful of this gap here as well, we could now get obviously a little bit of a bigger kind of correction. Now I have a level on top of level. That lower level for me is definitely another set. Okay, if we get as low as this lower level, that is a set. But anything that's happening here or potentially already here is something that we really want to be mindful of. If we get lower time frame reversals off of these areas, we really have to take a stab at this. Because also, if I look at the upside, there's a little bit of supply left here on the daily, but there's no weekly supply, there's no monthly supply, and I anyways don't like shorting all-time highs. And if I look at this, the shorter term uptrend as well, this moves perfectly within the momentum correction, right? So momentum, this is our momentum move, this is our correction move, this is perfect within the percentages in terms of your fib levels, right? Which is something that we do talk about a lot. If there is, these momentum moves and then price, is usually stopping in and around these percentages, and then you get another leg out, and that leg out is usually as strong as the first leg. And we are within that shorter term frame uptrend. So if that really happens, then just talking about upside potential here as well, right? Because for me, it's not like trading towards the all-time highs. For me, then it's really trading towards this 3,800 mark as the next kind of target, and then potentially even 4,000, hitting these even numbers here. And that's really the next kind of target area for me. So this is something we want to be mindful of. So for me, 3,800, if we get in a trade here, is fair game, and then we could even drift a lot higher here with this positive upcoming seasonality. Now next week, I know I've talked about Apple having this 5G event, which is going to cause volatility. Then we'll have banks reporting on their quarter earnings on Tuesday. So that could create a little bit of shorter term volatility to the downside, depending on how these banks are reporting their earnings, right? So on Tuesday, we could potentially get lower. potentially even, filling this gap down here. And then we could go into this level on top of level. And then from there, we could then begin this longer term seasonality.